So I'm here with Mariano today to talk about convertible bonds. I think post the second quarter, we've seen quite an uptick in issuance this year with 40 billion plus issued to date, which is up about 40% year over year. And Mariano, when you think about the market and where we're heading with rates where they are, do you think that continues the trend of convertibles being the product of choice for issuers in the market right now?
No, absolutely. With interest rates staying higher for longer, we have definitely seen a lot of interest in by corporates to lower their blended cost of funding. Converts, given the option that we embed in them, allow for a much lower coupon. We are on average saving, to anywhere between 200 and 400 basis points through converts versus comparable straight debt. I think the trend is even more pronounced when comparing the low coupons of converts against floating rate type of financing strategies like commercial paper or term loans. Given the fact that SOFR rates, which are the base for those products, is even higher than treasuries, we do find it that it's very appealing for companies to issue converts right now to prepay commercial paper and repay term loan borrowings, which not surprisingly is the main use of proceeds so far in 2024 for convertible issuance.
Yeah, and it's interesting. You're seeing it both across investment grade and high yield. And I think that we haven't had a period of time like that where both of those have been equally attractive in terms of their cost of straight debt relative to the convertible product. But I also thought it was very interesting. We've seen in March and more recently the first repeat issuer out of the utility space with Southern Company and Welltower in the real estate space as a repeat issuer. Do you think that we're going to continue to see these names that came to market in 2023 come back to market, given that rates seem to be not necessarily heading lower anytime in the near future?
I think we will see repeat issuers. We have seen a lot of investment grade, particularly type issuers focus on minimizing the risk of dilution of converts. They've done that by fixing the consideration upon conversions to cash for at least the par amount. Some of them have utilized also call spreads, but importantly, most of them have issued in the 3-year tenor. As we see now some of those issues go into the second year, it's only natural for many of those to continue benefiting from a convertible outstanding and the low coupon and refinancing existing issues.
I guess the second point and second part of what I think we're going to see, there was a ton of issuance in 2020 and 2021 post-COVID, and you had a lot of companies come to market. We had, I think, an average of $100 billion of issuance in both of those across those 2 years. A lot of those deals now are coming up on being current. A lot of them way in the money, but a lot of them also way out of the money. And how do you see the refinancing wave of these converts playing out over the next 6 to 12 months as these issues get closer to maturity?
You're absolutely correct. Many of those converts that were issued in 2000 and 2021, 22, either as 5 years, 6 years, or 7 years, are coming due soon. Some of them are in the money. A lot of them are still out of the money, and they will need to be refinanced. I see and I expect a lot of those converts to be refinanced in the convertible space. We have already seen that wave start at the end of last year. We've seen some of that continue this year. But I think what's really going to move that wave and get that refinancing started is equity prices. With the recent run-up in equity prices, and not only at the large cap, but particularly at the mid and small cap, we are expecting a significant amount of issuers to take advantage of what the convertible market offers right now to refinance that existing debt.
Final question is, I think that there's a great opportunity. We've been seeing a lot of companies looking at share repurchases and under-leveraged companies using the convertible bond to repurchase shares at current market rates. In some cases, companies buying back dividend-paying shares with cheaper rates on the coupon side of the convert. Do you think that's a trend that people will grab onto? I think some companies have been reluctant to refinance, or I should say raise capital to purchase shares with debt but do you see that changing given the opportunity that we're seeing in the convert market right now?
I think we've again started already seeing a trend showcasing the fact that that is beginning to happen. I think that there is several merits to taking advantage of a convertible issuance to buy back shares. There's the corporate finance angle to it, which, as you alluded, allows companies to immediately create EPS accretion by buying shares through an instrument, particularly if settled in cash. That creates that immediate accretion. Even for those who still retain the flexibility to deliver cash or shares, having already bought some shares up front is a very powerful tool to effectively position to the street the fact that the convert is not as dilutive. But there's also a technical benefit to doing it concurrently with the issuance of a convertible as well, because the convertible market has a segment of the buyers that are convertible, dedicated technical funds that need to short stock when converts get issued to hedge the exposure they take in the option embedded in the convertibles. That amount of shares becomes immediately available to issuers for repurchase upon issuing a convertible bond without having to pay any premium versus where the stock price is trading. So both from a fundamental corporate finance angle and a technical angle, there is a benefit to buying back shares. And as companies feel good about their cash flow generation ability and or are looking for that EPS bump in their earnings, this strategy will continue to be frequently employed.
Great. Well, look, Mariano, thanks a lot for your insights. I think we can all agree that there's a ton of demand right now for the product. Buyers out there right now want new paper, and issuers can come to market fairly easily and get attractive terms. So to the extent that you have convertible financing needs, Mizuho is here and ready to help and ready to help you think about pricing and terms.